Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some options data. This is the Wolfspeed $20 call expiring January 16th of 2026. So this is one that I did swing it a couple weeks ago. I bought a contract at 90 cents and then I sold it for 20%, making about 18 bucks. And then I bought back lower than the average I had before. I have my limit sell buy actually at 80%. Got filled at 79, so happy about that. Could have gotten my average down because the low on Friday was 70 cents, but I'm just chilling. I'm going to wait for, some catalyst or something to suggest that the bottom is in. No limit sells on this one because I have until January. And I think that this could be going a lot higher. But one thing that I have talked about is this coming lower to around 521. We're nearly there. And so I'll just go over the chart in a second why I think that could be a bottom. But I did just want to point out the increase in these volume here corresponds with increases in the open interest. But those spikes in volume don't really correspond with a lot of money, surprisingly, not a lot of premium. So that's actually pretty surprising. But yeah, there has been an increase in open interest. But yeah, let's look over at the chart here, Wolfspeed. And yeah, the reason why I think this could be coming down to 521 is because this Fibonacci retracement. We were holding 564, which was the 618, but on Friday we got this big rejection from the 21-day moving average, which is currently at 593, as you can see right there, that little peach-colored line. Got a big red candle on the day, so came down nearly 10% on Friday, closing the week at 533, being up a little bit in the after hours, about 4 cents. But we do see that massive rejection candle there, closing below the 618. So I might actually remove that from the retracement there just to clean up the chart a little bit. And yeah, so the 786 is around 521. I do have this kind of arbitrary line here, purple line. Maybe that's based on after hours pricing. Maybe there's a pivot point. No, I think that's really just kind of arbitrary, but we are trading below that level. And so, take that purple line with a grain of salt. We do have a gap down here at 482, which was the closing price on January 14th. So we might want to wait for that gap to be filled, but that might also be kind of a tease for bulls or those wanting to go long, to waiting for that gap to be filled and them getting left behind. So maybe we just find a bottom around 521 or $5 psychological level, whole dollar number. So I think that over the course of the next week, if we do see a dip to 521 or $5, dip buying opportunity, 482. If we do get that fill, I just like to see it holding higher than this previous low of 466, which does look like it is the 52-week low, so an important one to consider there. But if we're, holding above this gap, it's putting in higher lows, and things would then start to look quite bullish in my view, because we do have this massive or, really long-term downtrend going back to the highs of December of 2023. And so that has been notable resistance. This could be breaking out. And I do have this Fibonacci extension that could be suggesting, 14, 15, 20, maybe $30. Who knows? So I think there's a lot of upside potential for Wolfspeed, but let's see what the options data has to say about it. And so not going to look at the data for the individual contract, going to look at all of them over here. And so on Friday, we can see that there was an increase in volume, increase in contracts being bought up first part of the day, but then big selling at the end of the day. And we can see that the zero line is right around here. And with that, we see net call premium in green increasing. That's going to be reflected in here. Volume going up also with the net put premium increasing as well. And then we see increasing. So I'll just talk about the net call premium first, increasing, but then it fades towards the end of the day. And then we see the net, excuse me again, the net put premium increasing, some selling here, and then this massive jump up. So I find that to be pretty interesting that we see this massive volume dump corresponding with it. So it might just be that, there were some, let's see, maybe it was, I'm not sure. This is actually kind of confusing because you do see call and put premium both being positive, but the volume going negative. And so that would suggest that a high number of high number of cheaper puts maybe being sold here with the calls fading down. And so what it might be is that maybe there was a swap between, having, let's think about this, having a large number of cheaper puts being sold versus a small number of more expensive puts being bought. And so that would send the premium going up because a small number of expensive contracts are bought versus a large number of cheaper premium puts being sold. And so that's how you get something like this. And if we do look at the net put premium over the course of the day, went up by about $156,000 versus net call premium went up by only about $115,000. Overall, more puts being bought or more put premium going into it, I should say. And so that is going to be more negative or more bearish. If we do look at the bearable slider, that is 44% being on the bearish side. So that is the majority considering the neutral. But if we do factor in the neutral, maybe it's about 50-50. So take it with a grain of salt. But overall here, this does look more bearish to me. If we look over the past 14 days, what we can see is some spikes in put premium. This over here on the 29th, ending the day by an increase of about $538,000 put premium, but calls also being positive, but only being up by about $300,000. But less than those puts, so that is going to be more bearish. We do see some puts being sold over here, but contrary to that, see some being bought here and here. So it's kind of, in this like 50-50 zone, but we do see more recently a big spike in calls right here. So on the 5th, call premium, net call premium increased by $467,000 on the 5th versus net put premium only went up by about $53,000. So this is looking a little bit more bullish. But stock price is still coming down. And so I don't think that we are there just yet. I think in the next week or so that we will be seeing maybe some dip buys, some pullbacks when it does come down to around 521 or maybe 520. Hopefully this gap doesn't get filled and we do put in higher lows. But if it does get filled, keep an eye out for 466. We want that to remain the 52-week low.